What's going on, guys? This is GxrpPerez speaking, and today I decided to involve you guys on a little deep dive that I did. I don't want to get too much into detail. It's kind of it's kind of a bit of a deep dive. I'm gonna include a couple of videos in here, and I want you guys to come up with a conclusion. I'm not gonna pinpoint specifics, but I found out how all of this comes together when it comes to making a decision on if XLM or Ripple are working together. And I'm kind of gonna show you a few videos, and then you guys can kind of get the grasp. But before I do that, I'm gonna kind of walk you through what I found, right? So I was kind of going through this right here, and as you know, we already know Jeb McCaleb, founder, Mt. Gox, Ripple, how they all come together, blah blah blah, right? Then I started going down and I started looking at companies and what I can pinpoint, and how big does this really go, and then what about the economy, and how is that supposed to work, what's actually in the works. And this is what I found, right? So I actually started with gold, and I found what I needed to find. Now, OMFIF is an independent think tank for central banking, economic policy, and public investment, providing a neutral platform for public and private sector engagement worldwide. With teams in London, Singapore, the US, OMFIF focuses on global policy and investment theme relating to central banks, sovereign funds, pension funds, regulatory and treasuries, global public investors, and investable assets of 37.8 TN are at the heart of this network. So you can imagine how big this company is. It's actually like a forum for all central banks, anything financial, pretty much, which is insane. Okay, I don't know if you guys knew what that is, but I'm gonna leave it in the link regardless. And then I got to OMFIF through IBM, and as you all know, IBM is 300 years old, and they initially work with all central banks, programming wise. And who's IBM working with? Well, both XRP and XLM. Okay, now if you guys know specifics on that, cool, but I have to keep going. So then it led me to retail CBDCs, the next payment frontier. Policymakers at a number of central banks around the world are seriously considering developing and issuing a central bank digital currency with a consumer-ready CBDC likely to arrive in the next 5 years. And then it says here, that is the key finding from a report from IBM and OMFIF. The report, commissioned by IBM, encompasses an in-depth survey of financials from 23 central banks in the advanced and emerging economies. The finding presents a holistic picture of policymakers' approaches to setting up a retail CBDC. The survey projects that the first CBDC will be produced within 5 years in a small economy and respond to a specific policy objective with a well-defined use. A consumer-ready CBDC is likely to require some form of public-private partnerships. Central banks are hampered in their ability to offer financial services, and private companies will probably fill the gap without regulation. Private sector digital currencies could possibly undermine central banks' monetary sovereign and threaten financial stability. Key findings: in dealing with digital currencies, policy objective will remain central bankers' preeminent concern. Advances in technology alone will not determine how CBDCs are designed or whether they will be introduced. 73% of central banks survey respondents would require retail CBDCs to be available under all circumstances and for all types of payments where cash is currently used. More than half of the respondents said they were very concerned about the possibility that private challengers like Libra would critically undermine monetary sovereignty. 82% of those responding said their greatest financial stability concern from CBDC implementations was the risk of digital bank runs, which could damage stability and confidence. 64% of respondents said outsourceable intermediation functions such as customer onboarding would be important for CBDC implementation. Now, I found this random, right? And I was like, wow, look what it says right there. IBM. So here, the main force that's really ticking at the central banks right now is Facebook. It's a private company that has 2 billion, I believe, users, and that's shaking the ground because they know that technology is advancing. They know that cryptocurrency is emerging, and now they're trying to implement this central bank digital currency, and it's kind of like a stable coin, but I'm not sure because it doesn't really explain here if it's going to be one coin for all central banks. But this is fairly interesting. I'm going to leave it in the description as well. I'm going to continue with my findings. Okay, so then I looked it up. Central bank digital currencies. Central bank digital currency, CBDC, also called digital fiat currency or digital based money, is the digital form of fiat money, a currency established as money by government regulation or law. Central bank digital currency is different from virtual currency and cryptocurrency, which are not issued by state and lack the legal tender status declared by the government. As such, public digital currencies could compete with commercial bank deposits and challenge the status quo of the current financial reserve banking system. So pretty much, this is like serious. Like, people have to pay attention to this. Implementation, let's say. A central bank digital currency would likely be implemented using a database run by a central bank, government, or approved private sector entities. The database could keep a record and appropriate privacy protection of the amount of the money held by every entity, people, or corporations. In contrast to cryptocurrencies, a central bank digital currency would be centralized, and so a blockchain would not be required or useful. That's what they're saying. CBDC is a high security digital instrument like paper banknotes. It is a means of payment, a unit of account, and store of value. And like paper currency, each unit is unlikely identifiable to prevent counterfeits. Digital fiat currency is part of the base money supply, together with other forms of currency. As such, DFC is a liability of the central bank, just as physical currency is. It's a digital barrier instrument that can be stored, transferred, and transmitted by all kinds of digital payment systems and services. The volatility of the digital fiat currency is independent of the digital payment system storing and transferring the digital fiat currency. Proposals for CBDC implementation often involve the provision of universal bank accounts in the central banks for all citizens. Now, they get more into it here, and I'll leave it in the description. Let's keep moving forward. IBM. So I started going into IBM, their blockchain, and then I ended up here where it says transform cross-border payments with IBM blockchain WorldWire, which we covered WorldWire, right? And then here it says, what role could central bank digital currencies play in everyday life? Mind you, you have Stellar XLM, which is involved with IBM, but so is Ripple. And this is where I wanted to click here, and when I did, it led me to boom, right here. Okay, so this I showed you this prior, and now I showed you how I got there, and it was through the IBM website, and which led me to this. And this is where I found, obviously the worldwide benefits, blah blah blah, all that. And I don't know if this has a refined access to money for people. I think this might have a little video for you. Let's see.
Money. Somehow we've come to believe that money makes the world go round. Every corner of it. But does it? What's the point if it doesn't reach the people who need it? Or when they need it most? Why do we have to pay a fortune to send money or wait days to receive it? Because it takes more than just money. It takes speed, trust, and above all, people. Money needs to change hands faster than ever. With IBM blockchain, money goes beyond borders in seconds. It opens doors, closes distances, and brings people closer, so that no place in the world is remote. Not even this island.
Cool. I hadn't seen that before, but now that we did, I will close this up, and I will continue with my findings. Remember, you guys are going to come up with your own solutions, your own resolve. So then I continued, which obviously already read this. Then while I was reading this, I ran into, go back. I ran into ClickX. ClickEX, is a Polynesian payment system for low value electronic foreign exchange transactions using an interbank smart marketing retail system. It provides low cost electronic foreign exchange clearing services to clients in the Pacific Islands, avoiding the unusual foreign transfer fees and spread by, I can't read the last of it, but I went ahead and looked into that. So I came up to here and ClickX, right? About ClickX. Alright, so creating financial inclusion. We aim to make people everywhere financially better off with innovating financial services and educating the enhancements that enhances the lives and wealth of those that need it the most. Whatever. Sorry. All right, working. All right, so pretty much, let's go ahead and keep going. Ranked #1 service provider by the World Bank. Infrastructures, reducing settlement. All right, so let's keep going. I'm actually going to leave this also in the description, so if you guys want to take a look at this, it's pretty interesting. They are huge. And then you read in the news, 85 billion in 2018. Like they throw big numbers, and then you have the man behind ClickX. So now you have IBM, and then you have this company. They're getting together on top of Stellar to move all this money going around. Think about it. XRP, Stellar, cross-border payments, right? So let's keep going. Stellar also is involved and partnered with Packlet.org, whatever, leverage mobile technology to solve some of the world's largest social problems. We deliver essential information and vital services to improve the health and well-being of over 100 million people in over 65 countries, partnering with governments, NGOs, and social enterprises. We provide our users with information and inspirational access. So pretty much they're also WhatsApp for social. Look at that. That's crazy. Do it, blah, blah, blah. And here, government, winning, winning, and then as you can see, you got their partners, right? Stellar's partners is partnered with these people. Then they're also partnered with Aurelian. Aurelian's story is a fintech company in frontier markets. Aurelian was founded in 2012 by financial inclusion practitioners and fintech experts who spent years observing cooperatives, microfinancing institutions, microfinance banks, FBs, rural banks, and SACCOs struggle to grow with the rigid technology available. So pretty much, this is another company. Mind you, all these companies that we've come across are to get to the what everybody calls the unbanked, but at a retail level, a very personal level. We know that Ripple doesn't do that. So those of you that are not thinking, you need to do more research. And don't take it from me. Just do more research, but do the type of research that is going to get you somewhere. So I'm not going to get too into this. I'll leave this in the link as well. Then we went to Stripe, and then Stripe is also working with IBM and Stellar, and we'll get into that now. So to complete toolkit for internet business, Stripe builds the most powerful and flexible tools for internet commerce. Whether you're creating a subscription service, an on-demand marketplace, an e-commerce store, or a crowdfunding platform, Stripe's meticulous design, APIs, and unmatched functionality help you create the best possible product for your users. Millions of the world's most innovative technology companies are scaling faster and more efficient by building their business on Stripe. That's partner with Stellar. Yeah. Okay. So let's keep going. So Interstellar. I don't know if you guys know what Interstellar is, but I did my research, and when I came over here, I saw that they. Oh, sorry. Let's go back. There we go. So we have over here. We have Stellar Protocol, Stellar Protocol. So we keep going. Deloitte, which we'll get into that. It's integrated, blah blah blah. Cross-border payments. I know I found it here. Combined. Okay, so there was a company called Lightyear Corporation, and they acquired Chain, and then they combined both those companies, and they turned it into Interstellar. Now, let's look at Interstellar. I read a little bit on them. They're based. You see, they have New York and San Francisco. Okay, let's go ahead and click right here. Let's see what I found. Let's go and see updates. Read more. Oh, come on. Read more. Okay, so when I was looking through here, this is what I found interesting. I am excited to be taking on the role of CEO of Interstellar. I have always been interested in working on making things easier for individuals and companies, and I believe we have the opportunity to help make international payments more efficient, lower cost, and faster. This was my mindset when founding and running Zelle. That caught my eye, because how many of you use Zelle on a daily basis now? Well, that's what's leading the way. That's what opened up tons of eyes, Zelle. And if you look here, we were able to scale this over 50 billions in transactions and transaction volume from over 25 million users. Look how huge this is. So they pretty much, Zelle, I don't know if you guys know what Zelle is, but it's I say when you get Chase, they give you the option to connect to Zelle, and then from Zelle you can send money from Chase to USAA, and from USAA to Washington Mutual, and from Washington Mutual to what? So pretty much they're all a whole bunch of banks. It's a network of banks that use Zelle to cross payments with each other. Well, guess who's working with them? Yep, you guessed it, Stellar. And the program is called Interstellar. So they bought that out. They were the founders of that. Put you to think, right? Leave it at that. I'll leave that in the description. And we keep going. They're also connected with Vumi. Now, Vumi is a global, it's a world insurer. So it's insurance that's global. Just so you guys get an idea. I'm not gonna get too much into this, but you guys can go ahead and research that. Let's go into Deloitte. So Deloitte is also partnered with Stellar and VeChain. Now, I kind of wanted to show you this video because it's kind of exciting how technology is advancing, and then maybe you can see how Stellar starts to move its way in based off of everything that I've already showed you. I haven't even showed you the good stuff yet, because I have a couple videos towards the end that I want to show you. It's gonna go step by step, or maybe I might put it in play. We'll see how we play it. But at the end, I'll show you a few videos that are kind of interesting. Now, let's go ahead and play this. And this is the digital bank. Deloitte.
Technology is changing how we see things, from the very small to the immense. We can now see things we've never seen before. Seeing is believing. Technology can help you see what others can't and use it to increase loyalty and optimize experiences. With Digital Bank, you can zoom in on your customer to discover what they like and what they don't, empowering your frontline teams and creating meaningful customer experiences every time. People are complex, no two the same. Even identical twins share things they like and disagree over things they don't. The key is discovering what they love to deliver great human experiences that create long-standing and profound customer advocacy. With Digital Bank, you can zoom out and view the entire relationship and create unique offerings based on individual needs, behaviors, and patterns. Once you know your customer better, it's a simple case of right time, right place, let's go. In today's world, people are bombarded with messages. From the moment we wake up until we power off for the day, products, services, and offers abound. Audiences have adapted to quickly differentiate products and offers that matter to them from marketing gimmicks and jargon. Cut through is essential and can be easily lost. So seeing the full picture of your customer is paramount. Using Digital Bank, you can zoom out to see the full picture. Discover a new means of manufacture, by leveraging new technologies, ways of working, and data to rapidly improve your product and messaging across the entire customer engagement ecosystem. Digital Bank by Deloitte Digital and Salesforce, changing the face of banking.
So Digital Bank, what did I intake from that? Well, Stellar, because like I told you, Stellar can go from retail to institutional, but why wouldn't they use XRP to just push volume across the world? Simple, easy, fast. I don't know, you tell me. Now, you make your own conclusion. I'm not here to jump to conclusions. So, let me jump here. CoinsPH, which CoinsPH is in the Philippines, if I'm not mistaken, and it's a mobile app. We got it right here. So I saw it here. It was announced that Stellar Payment Network has expanded to include CoinsPH, a mobile payments startup in the Philippines. Okay, so let's keep moving forward. And it goes to Flutterwave. Grow your business with Flutterwave, the easiest way to make and accept payments from customers anywhere in the world. Accept payments anywhere. One payment platform that lets you sell wherever your customers are, online, in person, anywhere in the world, and everywhere in between. Now, Stellar's working with this company as well. Let's keep moving forward, and then we have Tempo Money Transfer, making money transfers fair and convenient. Fastest and easiest, most secure bridge between cash and crypto. What the hell is going on? Okay, let's keep going. Tempo offers the EURT stablecoin, a digital asset backed by on-hand cash and available for purchase online and at over 300 agent locations in Europe. We are fair and fiercely competitive. The right choices wherever you send money abroad, especially long term. Tempo, every transfer means more savings. Buy Stellar Lumens, Bitcoins, and I mean, Stellar is working with this company as well. That's funny, right? It just hasn't clicked anything in your head, so you still think XLM is this big? I don't think so. And then you have this conference coming up, right? 2020, 14 through the 16. I would love to go to that conference, because there you would know everything that's going on here, because they are also partnered with them as well. Now, I do have a couple videos which I am going to share with you guys. We can go deeper into this, but it's just so long, and right now it's late, but I wanted to make one just to show you exactly what my head's throbbing. I've been trying to look for an answer for a long time, and finally I think I have a run at it. I will partner up with Dad with Digital Assets Daily and kind of break all this down, but now I'm going to show you these videos, and then from there you can tell me what you think. Alright, so hit the like, subscribe, notification bell if you like what you saw. I didn't come to any conclusions, I'm just showing you simple facts, right? And from there I'm going to take little bits that can connect both, like gold. I also have a video from the actual OMFIF, which they state a few things, and let me see if I can find one of the videos here. Actually I have it pulled up, so first I'm going to show you the gold video.
Hello, my name is Pierre Ortlieb. I'm an economist at OMFIF, and I'm speaking to you today from the offices of the World Gold Council. I'm joined today by two eminent speakers. To my right I have Dr. Tatiana Fitz, the director of the Central Bank and Public Policy team at the World Gold Council, and Professor Michael Kitson, an economist at Cambridge's Judge Business School. Today we'll be speaking about the gold market, recent developments therein, and especially the role of central banks and the Chinese economy in stimulating and driving that market. Thank you both for joining me today.
Hello.
Thank you.
So I think I'd quite like you to discuss the main drivers in the gold market as of late, as of the past sort of 5 to 10 years. What's been going on and what has been the role of central banks?
Sure. Central banks have been net buyers of gold since the global financial crisis over the last 10 years. And on average, every year they've been purchasing about 500, 600 tons of gold. Last year, central banks bought 651 tons, an absolute record, more than any time since the end of the Bretton Woods system and the suspension of the US dollar convertibility into gold in 1971, nearly 50 years ago. There have been several factors driving the strong recent central bank gold demand. First, some of the central banks have been purchasing gold for rebalancing, to rebalance their reserves. Total reserves of central banks have been growing, and to keep the share of gold at the same level, central banks have been adding gold to their reserves. For example, the National Bank of Poland cited the growth in the international reserves as one of the key determinants behind its recent purchase of gold. So that's the first factor. The second factor is the macroeconomic uncertainty. The macroeconomic uncertainty has increased globally. You have deteriorating budget positions across countries, debt levels are rising. Interest rates are either very low or negative. And in this environment, gold provides a good alternative. Earlier this year, we conducted our central bank survey, according to which central banks take into account mainly the gold's lack of default and gold's long-term store of value properties as one of the key factors behind their gold investment. The third factor is the geopolitical uncertainty and geopolitical risks, with some of the central banks at the same time reducing their exposure to the US dollar. The de-dollarization that's been happening in case of some of the countries has been happening relatively quickly. One of the examples is Russia, that decided to sell most of its US Treasury holdings, and at the same time, as you know, Russia has been one of the largest purchasers of gold over the last 10 years. And finally, and I think that's what's most interesting, is that central banks have been buying gold also to hedge against structural changes in the international monetary system. If you look at who has been buying recently, the majority of central bank gold purchases have been coming from countries in Southeast Asia, in countries in Central Asia, countries with strong links to China, either via trade or investment links, especially along the One Belt, One Road route. And at the moment, the economic exposure of these countries to China is much higher than their share of the renminbi in their reserves. So, and since the renminbi is not fully convertible yet, the renminbi market is not fully open yet, so central banks have been purchasing gold instead.
So, if you would allow me to summarize very quickly, so there's the macroeconomic uncertainty as well as the absolute growth in the size of foreign exchange reserves, but then also this concern around structural changes, around a rebalancing in the reserve currency system. I think those are the three main pillars, including geopolitical uncertainty, which kind of factors into all of those. So you mentioned the One Belt, One Road system. Obviously, China's huge geopolitical and geoeconomic, if you will, endeavor. What's the rationale behind countries along the Belt and Road buying gold? Is it geopolitical? Are they sort of afraid of backlash from the U.S.? Is it purely financial? Because there has been a lot of talk about the Belt and Road being an instrument for the internationalization of the renminbi that hasn't been entirely successful, and yet still there have been substantial gold purchases. What's been the driving variable there?
Sure, I think the main driver there is the economic exposure and the economic links between these countries and China. So as I mentioned earlier, China is the largest trading partner for most of these countries. It's also the largest provider of FDIs, especially infrastructure FDIs. And this implies that the exposure of these countries, but also dependence of these countries on China has been growing. And naturally, over the long run, the share of the renminbi in these countries' reserves would grow. But since the renminbi is not that accessible yet, central banks have been buying gold instead already exiting the US dollar.
Interesting. Michael, you're an expert of sorts on renminbi internationalization. I was wondering if you could walk us through recent developments in that space. Obviously, it's been much talked about. It's captured the imagination, I think, of people who are frustrated with the current reserve currency system. But as Tatiana mentioned, there are concerns around convertibility, things like that. Why don't you sketch the recent developments in that space?
I think we should look longer term here rather than just the recent developments and think about the long-term trajectory and the path. You're quite correct, the RMB is not fully convertible yet. But if we look at the long-term trajectory of the world economy, the world is shifting from west to east. The biggest economy now in PPP terms, purchasing power parity terms, is China. You often hear people talking about the US being the biggest economy and China being number two, and that's in market prices. If we're looking at in purchasing power parity terms, China is the biggest economy. So we're seeing that balance shift. The potential long-term growth rate of China is much higher than the US and the West. So the Chinese economy is going to carry on growing. It's going to be a bumpy road, but it's going to carry on growing. So we're going to see China being the balance shifting from west to east. And the world economy being reorientated in that direction. And part of that will be we'll see shifts in the international monetary system. So we will see, I think in the longer term, the RMB being more internationalized than it is at the moment and becoming more important as a reserve currency. We're likely to move from a dollar-based system to a multi-currency based system. The euro may be playing a role there, but the RMB will be playing a role and the dollar will be playing a diminishing role. We've seen this in history before. We've seen it with the sterling being the dominant currency, and after the Second World War, the US dollar became the dominant currency, and now we're seeing the relative decline, not the absolute decline, the relative decline of the US. So rather than just think about the short-term bumpy movement, I think we've got to look at the longer-term path. And China's continued growth will see the RMB becoming more important internationally.
So you brought up the comparison with the US. For all its flaws, as an investor, if I were allocating my foreign exchange reserves, I think I would still prefer the treasury market to the limited access I can get to Chinese capital markets. What makes you think that that's likely to change over the long term?
I think I totally agree with you in the short term, but I'm looking at the longer term. I know Keynes said in the long term we're all dead, but sometimes we need to look at the longer term. And you're quite correct at the moment. What you need for a reserve currency, you need economic clout, and which China definitely has as the largest economy in the world. But it doesn't have completely open and transparent and deep capital markets yet. But I think that will be developing as the Chinese economy grows, as it becomes more open, and arguably the most globally orientated country, dominant country in the world now is China compared to the USA. The USA is becoming inward-looking, really focusing on making America great again. That may be a short-term phenomenon, but as the Belt and Road Initiative shows, China is thinking about international expansion. So yes, in the short run, you may say that there are still concerns about China, particularly its lack of transparency and its openness. But I think those things will be changing when we're looking 10, 15, 20 years ahead.
Do you think, another concern that investors I know would have is around the reliability of the national legal framework. Is that something that you envision would change as well? Is that something that you see changing in a significant manner?
I think that this will change, again, in the longer run, because China has to be open to foreign direct investment. And it is difficult now entering the Chinese market and the Chinese economy. But I think these challenges will unravel in the longer term. So I'm not denying there are major challenges now with China, but and it's going to be a bumpy route forward. But if we look, we've got to look 10, 20 years ahead. And we're going to have sustained growth, I think, in China over that period, and there will be changes in terms of the Chinese economy and more sophistication and more deepness in terms of its capital markets.
Just the final question before we link this back to the gold market. We've talked a lot about the constraints for investors in investing in China, but my final question, I suppose, is China ready to bear the burden of being a reserve currency? You know, it comes with significant costs, as the U.S. knows. Do you think that China and its governing authorities are willing to bear that burden at this point?
I think, from China's perspective, in the longer term, yes. But again, you hear lots of announcements from China saying it doesn't really want to be a reserve currency, and it's trying to dampen this speculation down. Because there are costs, and the costs may include depreciation of the exchange rate, of course. But again, if we're thinking the longer term, again, I think I'm talking 10, 15, 20 years ahead. It's going to grow in importance, and it will grow. It is an international reserve currency now, but of limited significance, but it will become more important over that period.
So, as you've outlined, we are likely heading to a world where the dollar experiences a relative decline from its current preeminence, one in which China plays a greater role and one in which gold as well plays a greater role. How do you envision the role of gold in that kind of multipolar, multi-currency reserve system? People talk about gold as a safe haven in times of uncertainty, gold as a transitional asset. What are your thoughts on this?
As the international monetary system changes, gold may help central banks and institutional investors as well to navigate through this transition from a unipolar to a multipolar international monetary system. First, because gold can serve as a hedge against crisis. And as Michael mentioned earlier, the transition to the multi-currency system may be bumpy. There may be financial crisis, there may be currency crisis happening on the way. And gold is a good hedge against such shocks. Second, although the renminbi is not fully convertible yet, the transformation of the international monetary system has already started, and central banks have started adjusting their reserves. And finally, if you look at what will happen in 10, 15 years, again referring to what Michael said, and what will happen in, how will the international monetary system look in 15, 20 years, it is likely that that as the shift to the multi-currency system progresses, we'll see the role of the US dollar declining, at least relative to the other reserve currencies. And this would imply that over the long run, the dollar would depreciate in relative terms with regard to the other reserve currencies. And since gold is negatively correlated with the dollar, it's a very good hedge against this long-term dollar weakening.
Sure. And once this transitional period has expired. I mean, we can't really gaze into our crystal balls and know what it will look like, but what do you envision the role of gold would be in a kind of long-term future where there is, broadly speaking, an equilibrium between different reserve currencies like the renminbi, the dollar, the euro, and so on?
So under the multi-currency system, you'd probably see the role of gold at a higher level than it is now in a multi-currency system where not only the dollar but also the euro and the renminbi are playing the role of the major reserve currencies. At the moment, the share of gold in total reserves is about 10%. It is likely to increase over the next years because of all these factors that we've discussed. So I would imagine that over the next couple of decades, we would be seeing the role of gold closer to 15% rather than lower than 10%.
Interesting.
It is important to emphasize that there's a lot of uncertainty.
Yeah.
I mean, as you stressed, I mean, a lot of uncertainty about the path of moving to a multi-currency world. And we've never really had that transition before. When the transition from sterling to dollar took a long period, there was a lot of instability in the interwar period. So it's interesting, you talk about the notion of an equilibrium. That may be a long time before we actually reach that equilibrium. There may be a lot of maybe a very unstable equilibrium, particularly if you have perhaps three or four dominant currencies.
Right.
We don't quite know what it will look like, but it may be a very unstable path, and we may not get to a period of actually some notion of a stable equilibrium in the long run.
Would it be fair to argue that the international monetary system tends to stability, however, given that it is very advantageous to use a single reserve currency in cross-border payments, trade invoicing, things like that? Is an unstable international currency system a workable environment for exporters, for international finance?
It's not desirable, but I think instability is quite common, really, in terms of the international monetary system. And certainly long periods of instability where you transition from perhaps one currency being dominant to another or a portfolio of currencies. That period can be a long period of instability. I mean, arguably, the period of greatest stability was the Bretton Woods system. And many would argue once that unravelled in the 1970s, we've been living in different phases of instability. I mean, I wouldn't call now a position of equilibrium. Certainly not a particularly pleasant or stable equilibrium. So I just think the path forward may be very bumpy and very rocky, and that may also have an important implication for the role of gold in that long transition period. Certainly.
Tatiana, Michael, do you have any closing thoughts on the future role of the renminbi and gold in that equilibrium or disequilibrium, as we've called it?
I'll just mention, sorry, Tatiana, I'll just mention that I think it's very important to recognise the shifting balance of economic activity from west to east. Again, we have issues about China and some of the Chinese policies, but that's where long-term economic growth is going to be the rapid. It's going to be in much of it in Asia, particularly in China, also in India as well. So we're seeing a rebalancing of the world economic activity, and the international monetary system will follow that. It may be with a long lag and it may be a bumpy route, but I think it will follow that adjustment path as the world shifts from west to east.
I would add that this transition and these structural changes in the international monetary system, they bring uncertainty with themselves, and gold in this context is a safe haven, is a hedge, and that's why central banks have been purchasing gold recently, and they are likely to continue purchasing gold.
Thank you very much, both.
Alright guys, so I saw this video and I intook what I intook, and based on you guys' knowledge and what you guys have seen in the late news, I don't know, but I have some very good videos coming up, which is going to be right after this one. I'm going to play it right now. Once I come up with that one video that I found, which is from 2018, and then I'll play the 2019 video I found. And these are only going to be 2 minutes long each, so bear with me. I think it's gotten very interesting. We've heard a lot about the gold standard, cross-border payments, and stable coins, right? We've all heard of them. They all mix and match because it only makes sense. This is just talking about, I'm just basing this on XLM and XRP. So let's go ahead and play the other video that I found.
Not least of the major strategic challenges facing central banks in today's volatile environment is the rise of new technology. One of these, blockchain, has the potential to significantly disrupt the world of financial services and also to add significantly to the armory of instruments within the power of central banks. Because of this, OMFIF is delighted to have worked with both IBM and several of the world's leading central banks on a seminal study examining the use of blockchain within the context of central bank issued digital currencies. The big strategic conclusions are as follows. Firstly, cryptocurrencies, which have garnered most of the press and most of the interest emanating around digital currency, are essentially, in our view, a distraction. They are best viewed as a speculative asset and treated as such, but they are not going to make a major impact on the world's financial system anytime soon. Secondly, although perhaps one day cash and coin, i.e. fiat currency, may well be replaced by digital instruments, this isn't going to happen anytime soon. However, where we really see use cases emerging is in the application of blockchain and digital assets to wholesale financial services, in particular cross-border payments. This report explores and examines the issues, describes the current landscape, and tries to map a chart forward to future developments in this area. To read the report, and indeed for further information, please visit the OMFIF website.
Okie dokie. Now, this is the last video I'm going to show. And it's the same guy, 2019, and guess who he's talking about? Alright, here we go. I hope you enjoy, like I did. Ready?
Our latest piece of research, completed just recently with IBM, has examined the retail space, defined as consumer use of digital currency. And in particular, we focused on central bank issued digital currency for retail customers. And come to a surprising conclusion, which is that we are quite likely to see a central bank somewhere in the world, although probably not a G20 central bank, issue a retail digital currency within the next 5 years. And this is significant. We've already seen movement towards this in some parts of the world, particularly Sweden. But a new impetus has been given. First by the explosion on the scene of Libra, the private sector digital currency advocated by Facebook and its consortium, which has taken the digital currency debate right up to the highest level of government, central banking, and indeed policymakers around the world. And the question is, should a private company be allowed, be permitted to launch a private digital currency? And in Facebook's case, that is potentially technically possible, and given 2.5 billion or so Facebook users around the world, that potentially provides a great launch pad for a currency. So that stimulated an awful lot of thinking in the minds of central bankers.
Okay guys, so I don't know what you guys took from all that, but I definitely know what I took from that. And I'm going to leave it to you guys, but I would like for you guys to put it in the comments, please. As if me and Dad were to break all of this down, I want to know what you guys were thinking when you guys saw all 3 of those videos talking about gold, talking about cross-border payments, talking about the change that's coming. Central banks are planning this together because they work together. So don't be fooled. I just want you to see that all of them are connected. And the first company that you have to look at is right in your face, IBM, and they're connected to everything. So you got IBM, Stellar, and XRP. Hit the like, subscribe, notification bell if you like what you saw, and please leave a comment down below. I would love to hear it. I did a lot of research on this. I'm going to put all the links. I didn't want to cover it all because I didn't want to make this a 2-hour video, but I'm going to have to cut it here and leave the rest to you guys. And sorry, but I will bring you more if you really like it, because this took me a long time to put together. Meaning, you know, go from one page to one page to one page to one page to one page, and kind of get you to where we're at now. So yeah, that's where I leave you guys off, and thank you very much for staying and actually paying attention to everything, and I'd love to hear from you guys. So have a wonderful day, and I hope you guys like the video.